close instantly. Go to inthemoneystocks.com. That's inthemoneystocks.com. Inthemoneystocks.com.
Welcome back to the Traders Network. Michael Yorba, your host. Thanks for joining us. We're also streaming to you live from yorbamedia.com. All right, with me right now, Nick Santiago, President and CEO in the Money Stocks. Nick, welcome back to the show. Thank you for showing up.
Thank you for having me again, Michael.
You're welcome. Okay, you want to start off today with the euro, right?
I did want to start off today with the euro because the dollar is making, the U.S. dollar index is making a power surge, and you see the euro selling off sharply lower. I think traders should expect this euro to trade down towards the 131.50 level. That's where traders could probably look for a short-term bounce. But if this euro starts to break down even more, and there are problems starting to brew in Europe, then this thing is poised to come down probably all the way back down towards the 123 level, which would be a lot of meat and potatoes to the downside. But right now, in the short run, I do expect the euro to pull back to around 131.50.
What's the fundamental story on what's going on? Why all of a sudden today we had such a big surge in the U.S. dollar?
Well, I think we're just starting to see more and more problems coming out of Europe. Also today, the ECB held their key interest rate, the European Central Bank, that is, held their key interest rate at 0.75%, 0.75%. But I think the exports there are really sluggish, and they just haven't printed enough money like the United States and Japan. And I think the market is anticipating them, the ECB, that is, to lower rates. And lowering rates would obviously cause the dollar to get stronger against the euro.
Okay. Any problems with the sovereign debt coming undone over there?
Of course. I mean, the problems over there are just enormous, and they're not just their problems. They're the same problems everywhere, which I think 2013 is going to play out, but it's a little bit down the road. But, yeah, I mean, you have just massive problems across Europe, and countries like Spain and Italy are always in the news, but now you're seeing bailouts taking place in the Netherlands. You're seeing talk that France is broke, and Germany is really the only solvent country over there, but there's only so many BMWs you can sell.
Right. Maybe they'll just get back down to 3 countries in the euro. Just kidding.
Maybe it'll just be one.
Yeah. All right. Well, what about Southern Copper? You want to bring that up, too.
Yeah, I wanted to bring up Southern Copper because China is actually, showing strength, and their stock market really declined while the U.S. markets were roaring and soaring. Now I'm looking at these copper stocks, and they're actually starting to really look attractive. So if you take a look at Southern Copper, traders could watch the level around 37.50. I think there's going to be a nice buying opportunity on this name. Please make sure you check the earnings. I think the earnings are going to be out sometime in March, so you do have a little bit of time. You don't want to trade in front of earnings, but Southern Copper is a name that actually shows a little bit of upside. I mean, potentially the stock has upside to around $44, maybe $45, with a buy, if it pulls back into that 38, 37.50 level as a buy entry. So I think that's what traders should focus on. The China story is, at least for now, is getting a little bit better, and I think copper stocks are showing that.
Okay, got it. Let's everybody know SCCO is the symbol and is trading around $40 right now.
Correct, Southern Copper Corp.
Okay. All right, now the next one, FCX.
Yeah, which is another copper name. This one's Freeport-McMoRan. They bought out Phelps Dodge many years ago, I guess in 2005, I believe. So it's primarily copper, and this stock also looks attractive. Right now, I think it's going to have a lot of resistance around the 37.50 level. So after that level, I would start to look for a pullback, but I would be a buyer of Freeport-McMoRan on any nice pattern or consolidation pattern that presents itself over the coming weeks. Okay, now the demand to make these stocks that you're talking about go up can't just be in China, or is that what you're thinking? It's only in China? Because these are huge companies. Well, sure. I mean, you have some demand elsewhere, but primarily it's going to be China, in my opinion. Okay, so not the real estate market in the U.S.? Well, there's so much inventory here in the United States. You're getting Home Depot and companies like that. Lowe's are doing very, very well. Sherwin-Williams, simply on this housing recovery. But there's so much inventory. I don't know if these stocks are going to be impacted by that. I guess to a small degree they will be, but I don't know if they're going to really soar or surge on the fact that the United States is making, a little bit of a housing recovery.
Okay, got that. All right, let's move forward with JJC.
Yeah, JJC is a copper ETF. So basically, instead of trading copper futures, you're basically trading the JJC. You'll see that this has made a pretty good bottom in November. It made a nice higher low, and it's been rallying higher. So the JJC actually has some upside potential. I don't think this is going to get above $49, though, anytime soon. I think that's where it's capped. But around that level, if it can base for a while, then copper actually has some upside potential, possibly into the $52 to $54 level. But again, these are potential setups, in the coming weeks, or coming, possibly even a little bit longer than that. So we're going to have to watch them on a daily basis. But these are some of the things that I'm looking at going forward.
Okay, all right. And then Red Hat.
Yeah, I wanted to bring up Red Hat today. I never really talk about many technology stocks, and this stock has held up extremely well. Basically in December of this year, the stock did trade down as low as $46, and it's held up really, really well ever since. I even like the base that it's making now. I wouldn't mind seeing the stock pull back to around 52, and I think that's a buy area. This stock can easily trade back up to $60, maybe $63.
That's really good. Now 52. Let's let everybody else know that's a 50-period moving average, roughly, right?
Roughly, the 50-day moving average is going to be at 52.95, so you're just going to look a little bit below that. But what you're going to see is that was the first backtest area going back to December 31st, and then the stock started to move higher. So markets love to come back and revisit their friends at the old levels. So I'd watch that level around 52. But this stock is making a nice pattern for a move higher.
Okay. All right. Good. Let's move forward to the S&P market. It's been a real washing machine for everybody lately.
Yeah, the markets have held up very, very well. They're still in an uptrend. It's severely overcooked here. So, to see a pullback would be, very, very nice. But right now, the markets are still holding up. The financial stocks are still holding up. The housing stocks, just minor little pullbacks, they're still holding up. So, right now, the markets are still holding up. The S&P, I'm in the position to think that it's due for a pullback. It's been overdue for a pullback, but we just haven't gotten one. The last time the spiders have even tagged the 20 moving average, you have to go all the way back to December 31st, which was the news about the fiscal cliff. So, this is getting a little bit long in the tooth without a pullback. I think traders should brace themselves for some kind of a pullback now.
Okay, and give us an idea of what you mean by some kind of a pullback. 10%, 20%, 2%, 1%?
No, that would be a correction. I'm thinking, maybe 4%.
Okay.
Just shallow. I think there's just so much money creation going on right now. These markets are holding up really, really well. There doesn't seem to be any real fear out there. The problems in Europe haven't really escalated enough yet to cause much fear. So, you look for maybe a 4% pullback. That would be about the extent of it.
Okay. Well, the issue that I've been wondering about here is every time we get something that approaches a 1% pullback, we get large money center banks buying into this market, and it pushes it right back up.
I agree with you. So in that case, now you'll just have to look for a consolidation pattern. If that presents itself on the charts, then you could jump on the long side. But right now, this market, like I said, hasn't even pulled back one iota really since the fiscal cliff news. So, it is a little bit due here to at least come in a little bit, maybe test that 50 moving average. But there's no guarantees that it's going to do it.
Got it. Now, the bond market seems to be at a critical point. Are you watching that market closely lately?
Yes, I am watching it very closely. We talked about it on your show even a while back. I said, the bond market is not looking as strong as it has. Yields have made very, very good moves, especially on the 10 and 30 year, up to that 2% level on the 10 year. The 30 year, obviously, up a little bit above 3%, 3.2%. But right now, when you look at the bond market, the TLT, we're at a very, very good support level. This 115 area is very good support, and then you have more support around the 113 area. After that, after if you go sideways in the bond market for a little while, then it could break lower. But when you have a central bank buying, $45 billion a month worth of U.S. Treasuries, another $40 billion a month in mortgage-backed securities, the bond market's just not going to, roll over and get slaughtered. It's going to, slowly grind lower as the market, starts to tell the Fed that they need to raise interest rates.
Well, that's what I'm trying to figure out here, because it seems to me that we are in a very bearish pattern here with the bond market. It broke through a couple of days ago. I guess it was the lows that were back in somewhere around November of last year. We've got only a minute left, and I took up some of it talking on my own. You have got a trading room that we can get access to. Give us a way for our audience to get into the trading room and watch you trade.
Yeah, sure. Come on over to In the Money Stocks. That's our website. You'll see our chat room button. Click that. You can take a 7-day free trial. You can watch us scalp trade all day. In there, you'll also get swing trades or join our research center if you work a full-time job, and you could see all of our nightly setups.
That's good. Thank you so much, Nick.
Thank you, Michael. Have a great day.
You too. Everybody, Nick Santiago, president, InTheMoneyStocks.com. On the other